this is a theme that Regal likes. It's a theme that Regal got into very early and has done well out of. I think one of the risks now is it is a very crowded trade. I mean, everyone is on the lithium plays in particular. Having said that, and I'll come back to the stocks in a minute, we're big believers in what's happening in the electric vehicle space. If you look at the moment, less than 2% of the manufacturing of cars at the moment is going into electric vehicles, less than 2%. China, for example, by 2025 is targeting that 25% of cars that are manufactured by 2025 will be electric vehicles. So it mightn't be 25%, but the point is it's going to be a much higher number where it is now. Globally, if you look at what all the global manufacturers are saying, we estimate probably 16% of new cars being manufactured by 2025 will be electric vehicles. So look, there's no question, it's happening. It might be a little slower, but it's happening off such a low base that we think the demand side for what goes into electric vehicles and the batteries is real. So what does that come down to? Lithium, graphite, nickel, all those types of things. We think the growth is there and will continue. So we've got no problems on the demand side. What's probably more interesting is on the supply side, as you have with any commodity, when demand increases, supply response increases as well. So what you've seen is, in particular, a lot of the South American producers of lithium, let's talk about lithium for a minute, have decided to ramp up their production. So SQM's the big one in South America. That's only natural. Our view was that there was always going to be a response, but what's worth bearing in mind is that the marginal cost of production for that lithium coming on in South America is going to be higher, which, if anything, will probably put upward pressure on lithium prices in our view. So look, there's supply coming on, no question, but our view is demand more than offsets that. So again, look, there's going to be noise, there's going to be times when people sort of highlight various parts of the supply-demand equation, but our view is it's real, and our view is that the supply-demand dynamics will continue to grow for all those commodities that go into the battery. Trying to find ways of playing that is a lot harder. Obviously, it was one of the easy themes 12 plus months ago. What you've got now is pretty much all the lithium providers in Australia, whether they're producing or not, have reached levels where it's getting harder to sort of get comfortable with the valuation. So what we'd say is that you have to be much more selective how you play that theme. We would much rather be in companies that are already in production. I mean, when you're going from an idea to production, obviously there's a lot of risk that comes with that. It's never as easy as it seems, whether it's the amount of money you have to put in for the facility, whether it's the timing of what you mine out of the facility. It's always harder once you move from pre to production. So we think if you're not producing hard, a lot of companies saying they want to do that, we can't see how you make money. But we do think some of the companies that probably still a little overowned, so we're not anywhere near as excited as what we were, but the Oracobras, the Galaxies, the companies that are in production, we think are real businesses, definitely worth keeping an eye on, even though, as I said, it is a crowded space. So we're believers there, harder to make money, but we think over time, it's a space you probably do still want some exposure to.